Hello, chart watchers and DecisionPoint faithful. Welcome to this Monday, February 10th, 2020 DecisionPoint show with your hosts, Carl and Aaron Swenlin. For those of you joining us for the first time today, we are so glad that you did join us, and we have lots to cover. So I'm going to just get us right started. We'll start off, of course, welcoming my dad. How are you doing?
Pretty good today. Marveling at the market's resilience.
Yes, it is pretty much, wow. It is quite amazing. I think it's, of course, for our portfolios, it's pretty great. But it does make me nervous as we continue in this direction. So let's go ahead. I'm going to talk about our agenda, and then we'll get right on into stuff. So interestingly, as we were just chit-chatting and talking for the show, I got an email a while back, and it basically was somebody who says, what is the deal? You guys are always bearish. We've been in this long bull market and you're always bearish. And what would it take for you to get bullish? So we'll cover that little chat first. Then we're going to look at today's market action, including the new highs, new lows chart, and the silver cross indexes, some interesting information on those. And then however much time we have left, Carl's going to talk a little bit about Tesla. He wrote an article about it last week. And biotechs, those were I guess, they were the best performers last week, if I recall, from the ETF tracker that we use. So they were top of the list, so we're going to talk about them. And then as a bonus, we do have the question box open. So if we have some time, I will take some of those questions if we have time from that question box. If you're watching live, it should be right to the right of the viewer, so you can go in there and ask us questions. So let's go ahead and we'll get started first off with Perma-Bears. I think we should just start right there. You know, we don't have any changes really to this is an old one, but we haven't had any changes except for XLE did have the sell signal come in on the intermediate term trend model. But other than that, we're pretty much looking at the same information that we've had for some time. So we're not seeing much change there. That sell signal, you'll find that on the XLE chart. Just compare the 50 and the 200-day EMAs, and you'll see that the 50-day EMA is below the 200-day EMA. So that gave us that long-term sell signal. All right, so
we do have a sell signal or a sell signal on the intermediate as well.
Yes, that one is still in play as far as I saw as of Friday. So that's still in play. But let's go ahead. I do want to talk a little bit about this notion that we are, perma-bears. That a lot of times people talk about being perma-bulls and that sort of thing. But we do get, at least I know when I was on Market Watchers too, everybody, it was sort of like, oh, Aaron, she's not going to be a bull, she's always errs on the side of caution, I guess is the better way to put it. But you and I were talking about it because what I had told our subscriber basically was that, we have been in a very long-term bull market. And so what I see our job as is to not be rah-rah all the way up, but to point out where you need to be cautious when things aren't looking right, when they are diverging from the fact we are in a big bull market. So, it's not that we're necessarily calling out for, a giant correction or that sort of thing. It's mainly just to say, hey, you need to keep an eye on this because, something isn't looking right to us. So for me, I feel like we err on the side of caution. And I also told this subscriber that, if we were in a long-term or if we were in the midst of a bear market, I'd be doing the other thing. I would be looking for the things that would tell me when are we going to get a bottom? What are the indicators showing? Are we getting the divergences? So it's really not a matter of just having a blinders on necessarily. I think it's just at least I see our job as pointing out what could be wrong.
Right. The primary mission of the DecisionPoint alert is to identify the trend and condition of the market. So the trend has been up forever, and but the condition varies, and that's where we get concerned. The when it gets overbought, then we start getting concerned. And another problem is and then when it gets oversold, then we would be looking for a bounce, or a continuation of the rally. One of the problems is it rarely gets oversold anymore, certainly not in the normal range. It doesn't get down to the bottom of the normal range anymore.
No.
It's been so positive. So it's difficult, but we're basically, that's our objective, is not just to be cheerleaders or Perma-Bears as was stated.
Yes, exactly. So I just hope everybody understands that, what we do is tell you what the condition of the market is, what the trend is, and that from there, we gather that out of our charts. It's not just a personal thing. Really our job is to look at these charts and, analyze them for you, tell you what looks like they're saying and why. So it's not really a personal bias necessarily.
And
all right.
you're where were you headed here?
Oh, well, I think we were going to look at your DP wrap because we were talking about trend and condition.
Okay, yeah.
So this is the DP weekly wrap. I'm not going to concentrate too much on it, but did want to show you what we mean by the analysis that we do. And so this is Carl's weekly wrap, and he's going to look at all the various charts for the week. And then one of the things that you've started doing, I know, is to add in front of when we go over our market indicators, is to talk about what the trend is and what the market condition is based on what chart you're looking at.
And I used to just put it one statement of it in the conclusion, but this for last Friday, I just decided we need to break it up and do a trend and condition short term and trend and condition intermediate term. So, and then in the conclusion, we'll sort that out because sometimes they will be in conflict.
Right. Exactly. So here we go. There's your conclusion. And of course, there we finished with what you're talking about, the trend and condition. So, excellent information there. And then every day I do the DP alert as well. And I'm going to be starting to add not only in the conclusion as well, the trend and condition, but I'll be adding it to the indicator charts as we've shown right here on our website. So, and again, we go over the dollar. We look at gold, and of course the weekly wrap means that you're getting weekly charts with all of those annotations. So all these annotations and charts are also available to you when you are on our website. I'll just show you really quickly how to get there. So if you just come into our blogs and links, our members get those chart lists, and all of those charts that you just saw are updated with all of those annotations. Carl keeps these up, he curates them. And so after the market close, he goes through them all, and then he will upload the most recent. So that's sort of a little side benefit if you do also subscribe to our website. But you're welcome to come here even as a free user because we do have a lot of show archives. I have all these workshops that I did. So there's links on all of these on YouTube. So you can get to all of them right here just from our website. So definitely take a peek at that. I think you'll enjoy it. And then of course on our homepage, please, if you haven't done so, we do have a free newsletter. Basically, it'll give you when we publish free stuff. And I'll be sending actually a notice out because I'm going to be doing an interview with financialsense.com later this week. So I'll be sending you a link to that later for our free subscribers and of course our paid subscribers. So All right, I think we spent long enough on all of that.
Okay.
So I'm going to pass it to you. I know that you wanted to look at the new highs, new lows, and I think just even looking at today's, action chart would be great.
Okay.
And then I do see a quick comment here, which is perhaps a better term for you guys is perma-aware of potential downside signals.
Oh, that's good.
I like that, perma-aware. That's
We should
awesome.
copyright that.
Might be
Okay.
stealing that.
Let's just take a look at what happened today. It was started out on the downside, but then it just went ahead and went up. We didn't get a lot of volume confirmation on that, and the VIX is stuck below the moving average of the VIX, and so it's hitting resistance there.
Yeah, and that usually is a sign of market weakness. So it's, I'm just finding it interesting that we can't seem to get that VIX down to those lower readings. That of course this is inverted, so that would bring it up.
When it gets up in this area, it's basically complacency, confidence that everything's going to be okay. So the fact that we're not showing confidence, I mean, even though it did this, well, we'll look at it a little later. I think I'll show you why it's not quite as good as it should be. Of course, it's my job.
Exactly, perma-aware.
This is a chart I led with on the DecisionPoint alert on Friday, but I just thought it would be interesting to see how it came out today. And here we did new all-time highs with the S&P 500 SPY, and then the new highs, individual stocks making new highs, contracted once more. So it's not in balance. Let's put it that way. Here's something that caught my attention this weekend. This is this Wall Street sentiment is a indicator that I started many years ago. We called it the Fearless Forecaster sentiment indicator, and basically it was different from the other ones because we took it on Friday and with the sentiment for how the next week would close, whereas a lot of the all these sentiment indicators out there have a period when they take the poll, and people's attitudes change hourly. Let's face it, and the idea that you have a whole week to collect a poll, you just never know. It's going to be quite a mix of market conditions, and I just thought it was a better idea to at least get a short-term.
Yeah, that is really climactic.
Right, and ultimately, I just got tired of too much work, and I passed this along to Mark.
Mark Young. Yeah, Mark Young at Wall Street.
Mark Young, yes. One of those things that wouldn't come out. WallStreetSentiment.com, and he maintains it now. And he changed the name to Wall Street Sentiment Bulls, and Bears. So this caught my eye. The really high number of bears was 75% bears as of Friday, and taking a look at how that's gone so far. When you get high numbers of bears, you can see right here's another one. We did get some decline onto that one here. It went up immediately after. It tends, if you go down long here, it tends to be a bottom picking. I don't.
Yeah, right.
Yeah, and it's the same token, you've got bulls. Got to watch where this comes in. this was kind of unusual here, but that was where we get the parabolic up move.
Right.
But these are, here's an example of reverse, how it's an inverse indicator, whereas you had a high number of bulls just before it didn't exactly crash, but really had quite a notable decline. And then here's another one which basically marked the bottom. So it's sentiment indicators can drive you crazy.
I know it's one of my pet things that I picked up. In fact, if you want to learn a little bit more about sentiment and even this chart, although it doesn't have the climactic reading in it, I did write my Chart Watcher article. It's a free article, and it's on the StockCharts blog, Chart Watchers. So you can check it out and learn more about sentiment and this particular chart in detail. I have to say though, Dad, and I know that one of the things I've seen on this chart is, a lot of times the market timers are right to start off.
Yes, that's true.
Yeah.
It's kind of, you've got to kind of look at it where it's coming in, but it's still, it's worth noting when bullishness or bearishness gets especially high. And
Yes.
let's face it, people in here, in the middle, they might be there a long time before everybody else catches on and it gets over bullish or over bearish. So not everybody is wrong.
No. Well, half of them are right.
Not all the time, right. Okay. I wanted to look at, let me go to Tesla first to talk about that. We've talked about this parabolic up move, and it broke down. This was the bar, the daily bar where I wrote the article, and that was when I said I guess it was a Tuesday, yeah. And I just said I didn't say this is the top. I said this is getting ridiculous, and this was where a lot of the bears got, the short sellers got squeezed out. Although I still hear that, I heard somewhat recently there were still like 20% short sellers, so that's still a lot.
Yeah.
But here we've got a breakdown of the parabolic and then the bounce we got today. And one of the things, the rumors today was that Google or Apple may buy Tesla, which, that's kind of flaky, but could be.
I suppose. I don't know that Musk would let go.
Well, I don't know how that would work, but yeah, there's that. But the main thing is that that is a possibility. And there was somebody who commented, I don't know who, but there's always somebody out there with some wild prediction, but they were saying that this stock could be at $7,000 a share in a few years anyway, which is okay, maybe. I don't know. Yeah, while we're on this subject, that Tesla, I did hear today that the Tesla and Apple people in China are going back to work. So whether that's a
good thing or
huh?
I wonder if that's a good thing or a bad thing, really.
Who knows? But that was an interesting thing to note. Okay, last week I think this was for a weekly move. This was the highest ranked stock on our ETF tracker list, which is 100 ETFs more or less of a very diverse list of sectors, foreign markets, commodities, and currencies, along with major market and sector indexes. So anyway, I picked this one out and I thought, well, this looks interesting, but it's right up against resistance here. We do get a
Oh, buy
PMO,
signal.
yeah, buy signal crossing up through the signal line. But I always like to look at higher, longer range charts. Here again, I don't, at least it's the PMO is moving higher, but it is oversold based on this top range here.
You mean overbought?
Hmm?
You said oversold. Does that mean overbought?
I'm being overbought.
Okay,
Yes.
just making sure.
Thank
Sorry.
you. And then I'll go to the monthly and I say, yeah, here we go. Here we have a parabolic up move. It breaks down. And instead of going all back to zero or the baseline, basically starts consolidating. This is called a high level consolidation. I've never heard anybody talk about it. This is except Kennedy Gammage, but not done a lot of research in terms of finding out who has maybe talked about it before. But this is a really positive move, in my opinion. It could go on for another couple of years. Look, it's been consolidating since about 2016. So it's been going a while.
Yeah, might be ready.
So it could go on some more. It could go another 4 years before it breaks out again. But that's good. That's a good picture.
Yeah.
And then, yes, let's go to the Silver Cross Index. Most people have heard of the Golden Cross, which is the 50 EMA moving up through the 200 EMA or moving average. And I started an indicator called the Golden Cross Index, which is the percentage of stocks with golden crosses in any given index. And then I got the idea that my trend model indicator where we get a 20 moving average moving up through the 50 moving average. I just decided I'll call that a silver cross because it's a shorter term, less valuable. And so we have the silver cross index. This is the percent of stocks here this in the S&P 500 that have a silver cross. Right now that's at 69, let's say 70, and that's off of its high somewhere in the early 80s there. Looking at the mid cap, we'll note that before that premier top here, we had a lower top there, and also for the S&P 600 small cap index, we had a negative divergence. But here's where I was talking that your mid and small caps did not make new highs today. This is a large cap rally is what it is, and so keep watching this. Here's the small caps, 40. Okay, they're at 49% on that's pretty bad. That's pretty low.
Yeah, I mean, you think about it, it's less than half have 20s above their 50s.
Right, exactly.
Yeah.
And let's see, we got 58% of mid caps on buy signals, so that's somewhat better.
Yeah, I'd noted on Thursday, I think we might have chatted about it. I don't know. But I looked at RSP, the equal weight on Thursday, and it was very clear that the big guys were the ones who led the rally because we had that new all-time high, I believe, on Thursday. And then and then we ended up with, on that equal weight, it was down. So, the SPY was up, like, I can't remember, about 0.5% almost, and then RSP was down slightly.
Right. And also a very similar chart, only there I have the S&P 500 NASDAQ composite and the New York Stock Exchange composite. And, You know, I don't know how smart we think we'll be in real time with these, but we can see divergences, and these kind of divergences are never, should always be warning flags. And currently, let's see, New York is down at 65, and NASDAQ at 58. 58.
Wow.
And then the S&P 500 at 70, we'll say. So.
Yeah, not great. But those large cap indexes, those big numbers have the big numbers.
Okay. Why don't you take it back and you can pull up a picture of the RSP chart. See what
Absolutely. So yeah, I found it really interesting. Actually, I need to go over to my StockCharts page. Yeah, so I thought it was pretty interesting. In fact, actually, I should go from here. There we go. DP alert, big guys carry. So that's what I was talking about. That's what I led with. And there's the RSP chart from last Thursday. Let's see what it looks like right now. So it was up 0.44% on the day.
On the day, but it's
still a lot less than what happened with the SPY.
Well, yeah, that's hadn't made new highs yet.
No, I'll go back there. There we are. And look at the declining tops even. Just, I don't know.
So here's us being Perma-Bears, but this is not healthy when you have this kind of divergence.
No, you know, I always talk about it. You have to have those small caps getting involved. So, well, it looks like we did have, let's see, a question. So did you find, are there any indicators that necessarily show you that Tesla was going to go parabolic?
No, it's just, you just watch what it's doing, and when it starts just curving around and heading vertical, that's when you identify it, and that's when you know that there's going to be trouble down the road. We have no idea. I have never figured out a way to figure out when the top will come. It's just you need to be aware. Yeah. Sometime if you're in it, let's say, well, when is a good time for me to book my profits and let this thing go crazy for somebody else?
Yeah. So here's Apple.
Right.
And so you could have, I mean, we have said for a while it's been parabolic, and it just keeps continuing. It looks like we did get a little bit of a drop in some consolidation coming in, but it's really a visual thing. And if you own a stock that is parabolic like that, obviously you know, because you're in it and you're doing great. But you need to protect yourself, because when these things break, we saw what happened with Tesla. That was a big drop for.
Well, wait a minute. Look at Apple. I mean, in 2018, it went down 40%. I mentioned this a number of times, but that's a 40% decline. So who knew it was going to go?
Right, and I'm sure everybody was talking about still buying it at this time. So just something to watch. And my advice is using a trailing stop. Whenever I get into a nice parabolic move, and I love them, I have a trailing stop. So my stop follows me all the way up, so that when it does break down, which is usually in a price shock, I'm protected somewhat. So that's my advice. But we got to close it out. It's been great having you here, Dad, and everybody, happy trading.